Gold near nominal all-time highs because I don't see buying gold as a speculation on higher prices. I call it the gold-dollar exchange ratio, or even as an investment. It's because it's savings, it's insurance. It is real wealth that you can hold in your hand and use in case of extreme need. And I have done this myself in my life. Okay, it was mostly silver. I've had a case of extreme need where I had no other choice, and boy was I glad I had bullion that I could turn to when I needed it. Hear what I'm saying. I'm not saying, hey, go out and buy $2,800 gold, it's going to the moon tomorrow. That's not what I'm saying. It's more like Rick Rule. I own gold because I'm afraid it may go to $10,000. That's my reason for saying that.
According to a recent report, the metal's price will continue to soar, extending its record-breaking price rally into 2025. Indeed, gold prices can convey a more realistic sentiment about the markets. Spot gold prices rose on Friday to their highest levels in almost 3 months, signaling that some investors are turning to the precious metal for safety amid uncertainty. Renowned speculator Lobo Tiggre stresses that real-life volatility is inevitable and sees gold as essential savings and insurance. Tiggre notices physical gold as protection and gold stocks as a high-upside opportunity in volatility. While GDX underperformed, strong gold companies delivered solid returns. He suggests quality stock selection can outperform gold itself. Despite the unprecedented growth in sector profitability, gold stocks have significantly lagged behind. Over the past 6 quarters, while the implied unit profits of the top 25 GDX miners soared 119%, the average price of GDX stocks rose only 17.7%. But stock prices have increased by just 1/7 of profit growth. This extreme valuation anomaly cannot persist indefinitely. Stock prices inevitably realign with earnings over time. Based on fundamentals, Tiggre has witnessed an upward trend in inflation since September as a lasting global shift. He argues that Trump's tax cuts and high government spending will further fuel inflation. Gold has consistently performed well during high inflation, acting as a store of value. In the 1970s, during double-digit inflation in the US, gold prices increased by over 500%. Showcasing its effectiveness in preserving wealth. Beyond gold, Tiggre states that all real assets, including commodities, are worth considering during periods of extreme volatility and fiscal dominance. While he refrains from giving specific stock picks, he implies that those who understand the market can position themselves for significant gains. Now we present the clips of Lobo Tiggre's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The potential for volatility here is not just in the stock market or the bond market. You're not going to see it in the VIX. You're going to see it in real life. Therefore, the most obvious number one thing to do is what? Buy gold. Come on. And I'm willing to say that with gold near nominal all-time highs because I don't see buying gold as a speculation on higher prices. I call it the gold-dollar exchange ratio. Or even as an investment. It's because it's savings, it's insurance. It is real wealth that you can hold in your hand and use in case of extreme need. And I have done this myself in my life. Okay, it was mostly silver. But I've had a case of extreme need where I had no other choice, and boy was I glad I had bullion that I could turn to when I needed it. So hear what I'm saying. I'm not saying, hey, go out and buy $2,800 gold, it's going to the moon tomorrow. That's not what I'm saying. It's more like Rick Rule. I own gold because I'm afraid it may go to $10,000. That's my reason for saying that. As far as making money, I've got one more thing to contribute here. And I said the only certainty is extreme volatility. I think the next closest thing to certainty is the continuation of what Lynn Alden calls fiscal dominance, or Michael Howell's global liquidity theme. And this is global, not just US. You Canadians know a little bit about this too. And that means more inflation. And it's really interesting to me that we've got this substantial uptick in inflation in the United States. Even the headline CPI, whatever the massaging and the numbers that they bandy about back there, the target of the Fed is CPI. They like the other measures better, but the goal is CPI, and it's been going up since September now, last September. This is huge. And they'll say, oh, it's just a bump on the road down to 2%. Well, guess what? It's not just happening in the United States. Well, A, it's not just a bump on the road. When you go up months, that's a trend. And B, it's happening around the world, global liquidity. This is a real problem, and it's not going away. And the Trump agenda, if you're going to cut taxes on tips and overtime and firefighters and everybody, you have a plan, a hope to recommend spending cuts, but you have no power to actually do that. You're looking at a continuation of wartime levels of deficit spending. That's fiscal dominance. And I think that drives inflation higher, and that has implications for all of us as resource investors. I mentioned gold as savings, that physical gold. But I actually think that gold stocks are not a bad bet for volatility this year. I mean, if you get the scare angle and more safe haven demand for gold, that should give us leverage to at least the better stocks. The GDX didn't do so well last year, but you all know if you look at the majors, the ones that delivered in spades and the ones that didn't, it's very clear that if you're a good stock picker, or at least go with the obvious better operators, you did quite well. You did better than gold betting on the better gold stocks last year. I think we'll see that again this year. So even if gold doesn't go to the moon, or even if it doesn't hit, the major Wall Street institutions are calling for 3,000 plus gold. That's pretty interesting. But I think the better stocks will deliver capital gains here. I think all real assets, including all commodities, not just monetary metals, are actually a good thing to look at in times of extreme volatility and fiscal dominance.
In the interview, Lobo Tiggre warns of extreme volatility in 2025 due to Trump's policies, particularly his broad tariff plans, which could conflict with his promise to reduce inflation. He argues that while Trump's rhetoric suggests swift economic fixes, the reality is uncertain, and overpromising could lead to instability. Tariffs featured heavily in the 2024 presidential campaign as candidate Trump proposed a new 10% to 20% universal tariff on all imports, a 60% tariff on all imports from China, higher tariffs on EVs from China or across the board, 25% tariffs on Canada and Mexico, and 10% tariffs on China. Historical evidence shows that tariffs raise prices and reduce the quantities of goods and services available for U.S. businesses and consumers, resulting in lower income, reduced employment, and lower economic output. On foreign policy, Tiggre states the risks of Trump's approach to Ukraine, suggesting that cutting off U.S. support might embolden Russia rather than end the war quickly, potentially worsening the situation. Let's get back to the interview.
Trump trade for 2025. There is a serious conflict between Trump's overall agenda, his promise to the American people, and his specific policies. If you're going to slap universal tariffs on everything coming from this country and others tomorrow, that will have consequences. And it won't make anything cheaper. So if you promise to end this evil Biden inflation, fortunately, Trump didn't say he'd do this in 24 hours, like end the war in Ukraine, another very credible promise. But he did say he would do it. And his language is very much in short order. Like he's going to get in there, he's going to fix that bad boy, he's going to fix everything right away. It's going to be great. It's going to be the greatest. We had the worst economy in history today, or yesterday, and we're going to have the best economy in history tomorrow, or next week. Maybe let's give them a month. The 100 days honeymoon. Does anybody find this credible? Anybody want to raise their hand? That's going to happen. Okay. Standing room only, out in the hallway, not a single person raised their hand. Right? You're not idiots. You're right. You're being rational. Good. No rotten tomatoes for me today, at least not so far. But this has implications. When you overpromise and underdeliver, what happens? The Trump trade of 2025 is high volatility, extreme volatility. I mean, there's a lot we can guess about what will happen, what won't happen. What will these measures tomorrow be? I mean, frankly, since Trump wants to cut inflation, it would be almost like clinically insane to slap tariffs on Canadian energy, raw materials, copper, critical minerals. That would just be so counterproductive. How could you possibly do these two opposite things? We have a president-elect who's known for chaos, so maybe possible isn't the right word there. But you see where I'm going with this. We don't know. I think there's a pretty good chance that he's not entirely stupid and the people around him aren't entirely stupid, and he's talking tariffs on everything, but if your goal is to protect U.S. jobs, you're not going to slap tariffs on the raw materials that feed into those jobs. Maybe Canadian cars or finished products, or those from China, but not raw materials. So we'll have to see. We don't know what's going to happen tomorrow. Nobody's seen the written text of this executive order that will do these tariffs. There are a lot of guesses about what those be. There's no knowledge. What we do know, though, is that it'll be exciting. There will be volatility. There will be fireworks. This is the one sure thing about what's coming ahead. And not to get too scary here, but I just got to put this out there because I think it's for real. I don't know exactly, I've never met Trump. I don't know what he's thinking, but from what he said, this "I can end the war in 24 hours" claim, it seems that his idea is we cut Ukraine off. We tell Zelensky, sorry, bud, you're on your own. No more money, no more guns, no more bombs. You better go make a deal with Putin, right? That would be a way that I could see in his head. Trump would say, this would end it in a day. We could just finish this and stop all the suffering and wasting money, okay? But if that's the deal, if that's the art of the deal, what on earth is the incentive to Putin to agree to that? If Putin's enemy is being cut off at the knees, I can see him saying, I'm sending in more tanks, I'm winning. My enemy just got cut off. Why would I negotiate for peace? Well, maybe because the U.S. will threaten and will produce more oil and will cut off your revenue. Well, Trump's going to do that anyway, drill, baby, drill. I mean, how's he going to tell Putin, no, just kidding. We'll leave oil prices high. Now, I'm just a rock kicker, right? I'm Doug Casey's due diligence guy for almost 15 years, and now I do it myself. I'm not a political analyst. I'm not a military analyst. But I got to look at the world because the mainstream media isn't going to tell me what's going on, and I got to think about it myself. And all I'm saying here is there's a risk here. Like, if Trump goes into this thing in Ukraine and it doesn't go the way he hopes, there is a non-zero chance of this getting much, much worse.
Gold's historical performance, tangible nature, and immunity to inflationary devaluation reinforce its status as a hedge. Investors rely on gold to mitigate risks and maintain financial security during inflationary periods. Given the expected volatility in 2025, should investors position themselves in gold to protect their wealth and capitalize on market opportunities? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.